Hey, what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. Go ahead and hit that like, subscribe, and that notification bell. There we go. And make sure that you get every single episode because we are entering into some interesting times. So go ahead and hit that like button right now. Thank you. All right, so we're going to get right into it. You guys know that this is brought to you by Stock Up You, right? You guys know that I'm still running a discount. You guys still know that you can use coupon code LEARN, LEARN, and get a nice Christmas discount right now. Let's go. U.S. stocks wobble on Thursday as Wall Street digests fresh job data, with traders increasingly baking in expectations that the Fed will deliver a December rate cut. All right, and it shows how the indices are reacting. Now, we had the numbers on yesterday, but the numbers from yesterday, the ADP is not quote unquote trusted like the jobs of this morning. So we had initial jobless claims come in this morning at 191K versus 220K that was expected. So we were expecting 220K and we only got 191K. All right. So that's why the market is just kind of flat instead of going up. Remember, we're in an environment now where bad news is good news, meaning if the unemployment or the jobless claims had been up, the market would have been more green because the Fed would be more apt to cut rates. All right. And so I just have to explain it that way because it gets crazy. Sometimes we get into a time frame where good news is good news. Now we're in a time frame where bad news is good news. So we could see right here the NASDAQ has been flat for the day, just flat. All right. We had the sell off in the morning, right? Came back, sold off again, roller coaster, back, flat, sell off, back again. And we would just call this a flat day. S&P, the same thing. You could stack them and see that they are literally reacting the exact same way. This is normal when we have a day that a lot of data is coming out, and that's what's happening right now. But there is a sector of stock that is actually running up today and running up really good. And it's the retail stock. And to pat myself on the back just a little bit, it was all of the stock that I was in and that retailers came late to the party. We were in early in all of them. Okay. But before I go there, I want you guys to listen to this guy talk about the economy. We're going to look at those stock. Listen.
Year end. Joining us now is Warren Pies, 314 Research co-founder and strategist. Warren, how are you thinking about the market into year end? Locking in some pretty healthy gains here amid broader questions around the Fed and the AI trade.
Yeah, thank you for having me. We're ending the year where we started, which is overweight equities and pretty bullish in general. We haven't published our official target for next year, but our big picture view is that earnings are going to come in at a double-digit growth rate. And contrary to probably what I would say consensus expects, we don't see multiple contraction next year. That's I think everyone kind of looks at the market and looks at the average historic PE ratio and assumes this market's overvalued. And I would push back against that. I think that multiples, if anything, have modest expansion next year. So when you put that together, lines up for a bullish 26.
And people should pay attention to you because you did get the 25 call right, where a lot of strategists did not, I think, right? $6,800 price target on the S&P. You, I think, liked stocks in May after you predicted a correction in the first half of the year. Talk a little bit about what went right in terms of your forecast for this year.
Yeah, we've been on a decent roll for the last 2 years, and I appreciate that. And so, yes, we came into the year with a 6,800 price target. We downgraded stocks in February. We expected weakness to 10% correction in the around that end of Q1, beginning of Q2 period. We had that. We moved back into stocks aggressively in May, and then normalized that in midsummer, and then have just recently gotten overweight again. And so that's how we've played the market this year. We've been pretty much correct in our call that yields would be lower. We called for about an average 4.1% on the 10-year, which coming into the year was quite out of consensus.
All right, guys. So he said that they got back in September. All right. Remember, guys, we were buying here after Liberation Day. So he got back in September, though he's been right. We just got in earlier, right? So here's some of the hot stock, which we were in all of them, that a lot of Wall Street missed the V-shaped recovery. All right, let's look at this. We got IONQ, stock surge 12% as quantum enthusiasts return, right? So guys, I want you to look at that. They're returning, and we can see that D-Wave is up 12%. Rigetti is up 12%. We could see this. Shares, INOQ shares are trading higher on Thursday. The quantum computing stock appear to be resuming upward momentum after finding support around the $40, so around 40 level following a period of consolidation because it ran up too much too quick. You guys remember I said that, too much too quick. And I know a lot of people are looking and saying, wow, it took off today. For those of you that were in, congratulations, if you were in at the right price. So let's look at all of the stock that we were in. We were in USAR, okay? Let's see why USAR is up today. Look at this. USAR stock is up today due to its significant rare earth supply agreement between LMC, all right, and this company, Magnetic Technologies, Arnold Magnetic Technologies. This partnership is a key strategic step as USAR prepare to commission its magnet manufacturing facility, all right, so in Oklahoma here in Q1 of 2026, right? So here's what the big story is. Investors are focusing on the long-term growth narrative of building a domestic rare earth supply chain independent of China. That's why we got into USAR. Remember, I brought USAR to the family and everybody and all the other influencers, and CNBC started talking about it later because I was looking for rare earth, right? And then we got into the warrants, which remember, we sold the warrants. I'm not holding warrants in anything. No Rigetti, no USAR, none of that. We sold, all right? We sold. Now, is it time to get back in? That's one of the things that we will see. Listen, I just not going to chase at this point right now. If you look at the 6 month, if you look at the day right now, okay, so we got USAR, Oklo, okay, USAR is absolutely soaring, and I believe in it long term. Did I miss the bottom? Could have, but let's look for a minute. We got Oklo, APLD is up 5%, Rigetti's up 15%, and Oklo and USAR are two totally different companies, okay? We got nuclear here, and we got rare earths here, okay? So this is energy, rare earth, right? And quantum computing. But why are they all going up? Because these were retailer stocks that went up a lot, and retail investors like to go back to where they struck gold at, all right? And I get it. So here we go, year to date. Guys, I want you to see this, year to date. We got, boom. This is where we sold, okay? Let's go 1 year. You could see. Now let's go year to date. This is where I sold. Leave me something in the chat. You remember the morning of the 16th. That's when we sold. We sold right there almost at the top. Actually, we started selling here, 14th, and we were selling here. We tapped out that morning. Remember, I was selling. You guys were exhausted. I was selling everything. And we sold all the warrants. And we sold Rigetti for 508%. We sold everything here. So we're not back. But I want you guys to just take a look at this. You guys could see in this wedge, we had these big moves up, down, up, down, up, down. All the while, it was kind of going up, and then we peaked. Remember, we peaked out here at 43 bucks on USAR. And why did we have this, right? It was news driven. It was news story. On again, off again with China with these rare earth deals. We're getting close to a deal. Well, nothing happened. And so this is one of those things that is news driven, okay? Because if we do reignite our rare earth deals with China, then USAR will fall again. And that's why it's hard for me to chase at this point. Now, I'm not the expert. I keep telling you guys I'm not the expert, but I'm learning more every day that here we are right now at 1761. And then there is some resistance here at 1760-ish, right? And so I see that we could hit there, but we could pull back and come back down to the $15 mark. Unless something happens and they do another deal, all right, then we could just push right by there. As a matter of fact, we could just run all the way up to $20 if we have some more good news. We could run back up to the $20 range with some more good news. But I believe that we could lose some steam and pull back to go towards back down to the $15 range. That's what I think based on my ghetto technical analysis. And I'm going to keep it real. That's what I see. Everything is going good on this good story. But long term, I see that there are some true positions that we need to start looking at in all of these, because all of these stock, they are going to enter into a position where they are back. And so that's what I'm going to focus on. Yes, I want to get back in USAR. I want to get back in Oklo. These are some long-term plays that I want to get into, but Oklo, of course, is something that they keep saying that is 4 to 5 years off as it pertains to nuclear. And there are nuclear sites already built that just have to be reactivated. And you got to look that you got to go through quarter after quarter after quarter with most of these companies with no revenue. So what we need to do is pull back, zoom out, see what the best buy price is, and accumulate slowly and hold long. Okay. And so I want you guys to do that. And you guys tell me, where do you think we should be buying any or if all of these? Okay. So I'll tell you what I am going to get back into eventually. I'm going to get back into some USAR. I'm going to get back into some Oklo. I like APLD. I know when tech gets wrecked, APLD falls like a rock, but I like it. And Rigetti is another one that I think has a long-term growth potential, but right now, maybe it's rebounding a little too fast, too quick. That's what I see. I may be proven wrong by the time you see this video, but that's what I see. Let me know what you think. Guys, listen, if you want to know how to think for yourself, Stock Up You is the place for you. Okay. Listen, I know Black Friday is over. Cyber Monday is over. I'm just running my Christmas special right now. We're going to blow right through it. Come and join us. Learn how to think for yourself. Learn how to earn. And again, just use coupon code LEARN, LEARN, and come and join us. You could look at the payment after the big discount and still break it up into 4 or 5 payments with 0 interest. Buy now, pay later. There is 0 excuse. I make it very affordable for everyone to join Stock Up You, where you can learn about stocks, crypto, and options. All right. We'll see you later. Live, love, laugh, and learn.